Hi, Mike Swanson here, and I'm still down in the Bahamas with Dave Skarica, really sitting on his porch at his place. And I've known Dave for several years now, since 2002. And the reason I met him, actually, because I was starting to get interested in the gold market.
2002.
In 2002. I was actually shorting the stock market from like 2000 to the beginning of 2002. Then I got heavily involved in the gold market for years, and I needed to find people who knew more about it than I did, because all I was doing was looking at a chart and, oh, that looks great. So I've sought Dave out and got to, he's one of my real good friends now, and he knows more about gold than I do, so I turn to him a lot to pick his brain about gold, and that's what I'm going to do with you today.
And I guess the nice thing is, about that time, I started speaking at these trade shows in Canada, so I got to know, and I'm originally from Toronto, so I do know a bunch of people in the junior kind of mining arena. So on top of whatever technical trading or gold trends or being bullish on gold for whatever reason, I know a lot about getting into individual deals. We've done okay on some of them, and we've gotten to know a lot of people in that industry. And so that was kind of nice synergy too, because like you said, you're purely technical and we're just looking at charts, and I would actually know some people behind some of these things, right?
Well, we've had a big run up in the gold stock since November, and in the price of metal, gold itself went up like $20 or something Friday. So
yeah.
What's your take on that? Do you think this is a good time for people to get in, or what should they do?
We quickly mentioned this in the last video. I'll quickly go over it. Basically, long story short, last November, the gold stocks got to historical low valuations versus the price of gold. So they were like a screaming buy, and I actually didn't know if they would have a base bottom. I actually thought at that time they might have a V bottom, because they got so cheap, because they had hedge fund and liquidation, right, and mutual fund liquidation. So they were just forced selling. So they've rebounded quite strongly. In the first quarter of this year, I was not overly bullish on gold bullion itself. A lot of people were running towards it. You see a lot of those gold commercials on TV. I heard that you couldn't find coins. I thought they was getting a little frothy. And one of the indicators I watched, which is a really interesting indicator, is I watched two things called the GTU and the CEF. That's the Gold Trust Units and the Central Fund of Canada. And both of those are closed-end funds, which just hold kind of like the bullion, gold, silver, etc. And closed-end funds trade at premiums and discounts to the net asset value, which is their true value. See, and back in March, when gold touched 1,000, the CEF and the GTU, they were trading at like 30% premiums, which are almost like highs not seen for years and years. So I thought, okay, that just means there's too much frothiness in the market, too many people running into gold. We're going to see a pullback. We pulled back to about 850. And about 2 weeks ago, I started changing my tone. And all you have to do is look at some interviews I've done on House Street or on our sites or whatever, or my own podcast that I do for my subscribers on my site. And I started saying, look, the GTU premium is down to 6% now. This is about 2-3 weeks ago. That is about the lowest level it has been probably in about a year, which means there wasn't a lot of premium. The frothiness had come out of the market. And not only that, this occurred with gold barely pulling back, only pulling back from like 100 or 1,000 to as low as 850, now in the low 900s when the premium got sucked out of the market. And that's classic bull market action, where you get overbought, and then when you work off the overbought level, you do it without a big sell-off. Like, to me, that's classic like bull market action. So in the short to intermediate term, I'm quite bullish on gold. Like, I do think the U.S. dollar might bounce here in the short term, but I think that I was looking for a gold breakout over the second half of the year. It might happen quicker than I thought. Like, I could see this happening in June and July, because we don't have big premiums, we don't have big frothiness. The stocks are looking quite nice, and we're seeing a lot of junior stocks which totally got slaughtered. They fell 80% on average in 2008. A lot of them are coming out of bases, and there's one that I like, and actually Mike likes as well, that's I think a holding company. It's trading at a big discount to its net asset value. It looks like it's just about to break out here, and I think we're seeing a lot of positive action. Now, it's higher tier stuff right now, stuff with ounces in the ground, or actually small production, or has a lot of cash reserves. But the juniors are actually looking better to me right now than a lot of the seniors.
Oh no, for sure. The problem I have with the seniors is they've run up so much that it's hard for me to find a good entry point right at this moment in them. I'd rather see them pull back or pause or something. But with the juniors, I don't see that so much, because there's a lot of juniors that are coming out of good bases.
Yeah, I agree.
That they formed, and they look like they have more upside
I would
to
agree.
them than the majors do.
Let me give you an example. Again, this gold, the XAU to gold
Sure.
ratio. It's now at 16%. Now, historically, it trades at 22%, right? Well, the math on that is that to get to 22%, actually, it's still quite bullish. It means that gold stocks can move about 30% without the price of gold having to move at all, just to get back to the historical average, right? So that's actually positive. But last fall, you were talking gold stocks could double without gold moving just to get back to the. So I think the extreme undervaluation and upside in the seniors has kind of been sucked out of the market. So I'm actually done that myself. I've also had some junior producers really run up, and I'm kind of trickling down right now. I'm looking for stuff that's showing that basing formation, and I had some stuff luckily that like went up 3, 4, 5 times from its lows in November, and I'm looking to get out of those and kind of like you said, get into the stuff that might be coming out of bases.
And the thing too, the juniors is, even if you're saying that the price of gold, the XAU divided by gold ratio shows what 16. Well, it's still undervalued compared to the metal, but the juniors are even more undervalued because they crashed even more.
Yeah, well, again, if you want to look at another simple ratio I watch, I look at the CDNX, which is the junior index in Canada, divided by gold ratio. And at the top, that was like 3 or 4 to 1. Like the gold was 800 and the CDNX was 3,200. Well, at the bottom, it got under 1 to 1 because the CDNX collapsed to under 700. And now it's still just over 1 to 1. And if you look at a lot of junior stocks divided by the price of the metal that they produce, again, they're really cheap. Like the CDNX is only 1,100 even with the recent bounce from 700 at its low. Well, you're still talking it's off 70% from its high. And it's in the resource sector that's in a bull market. It's not like, okay, you could say housing stocks are still 80% off their high, but housing stocks were a bubble, right? So they're still in a primary bull market, but I think they're still to the point, because you're early, I think in the next move up, that you have to be very selective. And hopefully that's where guys like me and Mike can help you.
Would you have any last-minute thoughts about gold?
No, I just think that, I'm kind of looking for a short-term pullback here, but I just think that because we don't have the premiums in the gold ETFs to the price of gold and closed-end funds, and because of the way some things are shaping up, I wouldn't be surprised if we see this breakout of gold. And not only that, if you look at the chart of gold, the big base between about 700 and 1,000 on this last year or 2 years, if you break 1,000 to the upside, that should lead to the mid-1,000s. As crazy that could sound, but that's how positive it is. And remember, the long-term gold primary indicator is the Dow to gold ratio, which usually peaks, meaning a peak for gold, bottom for the Dow, at about 1 to 1, 2 to 1. Well, again, if you're looking at that sort of thing, you're looking at maybe say the Dow stays where it is today, you'd be looking at gold in the 4 to 8,000 range. Now, that last move up would just be a bubble, and it would crash right back down. But that's what I'm trying to show, that I believe right now gold is where the Dow was in the late 80s. Okay, it's had the big move off the bottom. It's not cheap any longer, but it still probably has a ways to go in its bull market.
Well, I'd just recommend that you go and subscribe to his newsletter, because that's what I do myself. And one thing about your work is you're a lot more flexible than most of these people at these gold conferences that have newsletters, because they just tend to be bullish on gold all the time and telling you this stuff all the time. And,
yeah, just a quick
they're
note.
not. Go ahead.
Oh, just a quick note is that like a month or earlier in the year when oil was 40 and gold was say 900, I said I'm way more bullish in oil now than I am in gold. Right? I said that at the beginning of the year, and of course oil's gone to 65. That's, do the math, that's up 60%, and gold has roughly stayed flat between 900 and 1,000. So yeah, you're right. I'm much more flexible, because all these guys do at these gold shows, and I like a lot of the guys personally, but all they do is they tell you the market's going to collapse and gold's going to skyrocket, and I just don't think you're doing anybody any favors or any help by doing that sort of thing.
No, for sure. And when you do subscribe to his newsletter, you're going to see his stock picks. But it's more just stock picks, because he talks about the broad market too, and he'll give you that information, and you'll start getting it, and you'll get a better feel for what's going on in the gold market, and feel a lot more confident about what you're investing in when it comes to your gold investments. That's for sure. So we'll be talking to you later, and thanks for joining us today.
Yeah, thanks.